All right, guys, in this video, I wanted to put to rest the whole debate argument about when Bitcoin is going to bottom. And I'm going to show you guys in 4 different ways. The first way I'm going to show you is using the Fibonacci Retracement tool. Number 2, I'm going to show you with a basic diagonal trend line. Number 3, I'm going to show you with the 200 EMA moving average. And then finally, the most damning evidence is the amount of time from the bottom of a cycle to the top and then from the top to the bottom. There are a certain amount of days that have been very consistent, and I'm going to show you in 4 cycles that everything repeats itself. So let's not waste any time and let's start with the Fibonacci just to begin with. If you don't know where the Fibonacci tool is, it's on the top corner of the drawing tools on any platform. You're going to find these 5 lines. Okay, so once you click it, it should be the first choice on the top. So once you click on it, if you go from the bottom of the cycle to the top, you're going to notice on most cycles the bottom isn't in until it reaches this second level from the bottom, which is the 786 level, which basically just means that you're 78% from the top of the cycle. That is normally when we end up retracing and going back the other direction, at least in every cycle that has existed for Bitcoin. So let's go back and look just to make sure. So if I go back to 2020 cycle, which was last cycle, if I put the Fibonacci from the bottom here, if you scroll it back, it basically lines up with the 786 from the prior cycle. That's how you started. It was the same thing over here for this one, right? It's kind of lined up with this right there, right? The next cycle should start on the 786 of the prior cycle. So if you go to 2020, okay, and you look at it, same thing, right? 78% from the top, we hit this 786 retrace, which is a very popular rebounding area for a lot of assets. And I'm here on the daily time frame, and I'm showing you that in 2020, it bounced very obviously off of the 786 and then started the new cycle in 2023, right? So if we go back to the 2017 cycle, I mean, guys, this is just back data, obvious evidence. The best way to predict the future is by looking backwards and trading. That is a constant, all right? So if you're not understanding backdating and looking backwards to identify trends, then this is the trend of all trends. And it's been very consistent with Bitcoin. I'll go back to the first cycle in 2011. Same thing, guys. Gets up to the top, comes down to the 786, and then retraces. So this is nothing new to traders. People who trade for a living, people who are deep into technical analysis will tell you to look backwards. And this is very bewildering to me that people are thinking that we were gonna move up before we got down to this level in this current cycle. So that is one way you can check. Okay, so let's go through the second one. Because if I go through and I just draw a trend line on any one of these, this is how you know when we're about to start a new cycle. If I draw a diagonal trend line from the top to the bottom and I line it up, the way that you line up a diagonal trend line is you want to make sure you're touching the peaks of every top on the way down from a cycle. Try and catch as many as you can. Try not to run through any of the candles. And then once this trend line is broken, try and catch as many candles, the peaks on the way down, and as soon as it's broken, you will see that the new cycle will start. And it goes with the inverse, right? How do I know when the cycle's over? Well, you just draw one underneath the price action, try and line it up, right? You got this obvious peak here all the way up, and as soon as price crosses under this trend line, the cycle's over. Okay, till it hits the 786 and crosses back over this trend line. Let's look at the next cycle. Easily identifiable. As soon as this trend line's breached, it's over. We're going back. Okay, same thing. 2020. Okay, draw a trend line from the top to the bottom. As soon as that's breached, we're starting a new one, especially after it hits the 786, right? And so I'm not going to beat a dead horse, but the way that you knew this cycle was over, and I knew it was over, and I told everybody in my Telegram, it's cooked, right? Because if you're looking for when price is going to dump, you draw a trend line from the beginning of the cycle, 2023. You draw it straight through. There should be a trend line that is not broken. This took 2 years to break, and so this is a very significant trend line. So once it broke, it just retested and then we dumped. Right? And it happens every single cycle. you draw a trend line from the bottom of the cycle. You try and line up as many of these bottoms, just like on the top, you're just drawing peaks, you're trying to get bottoms. And as soon as that trend line was broken, we dumped. So that is how you would be able to do it by using trend lines. So let's remove all this stuff so I can show you how to use the EMA to determine when the cycle's over. So let's start with that first cycle in 2011. Now, I'm using a 200 EMA, and if you don't know where to find an EMA, just come over to indicators and you just type in EMA, and it's this one right here, moving average exponential, and then just pick a 200 EMA or type it in the inputs. You're gonna notice that when the cycle starts, only time I'm getting into the cycle is once we're above the 200 EMA, right? You can see that we're under way. I mean, this is the beginning of Bitcoin, so it's tougher at the beginning, but you can see as soon as it jumped on top of that 200, as soon as it jumped on top of the 200, the cycle began. And it kept going for a couple years, right? These cycles last 2 years. So as long as we're on top of that 200, we're good, we're safe. I mean, if you want to catch the top, it's tough. But at the same time, you know that the cycle's not over as long as we stay on top of the 200. Yeah, it dips under, it gives you a little bit of a scare here, right? This was fake manipulation. It came up, but then it did confidently go underneath the 200. And then there was a bear market. As soon as this crossed, a year went by. So what happened here? Okay, we jump back on top of the 200 and then the new cycle starts. So we go for 2 more years all the way to 15. We're good, right? We're good until we get underneath the 200. Yeah, there's some fake outs here. You might want to get out, wait till it gets back in, because you just never know. This could be the end of it, but it ends up coming out anyways. And then you're done, right? The cycle is over until the next one starts. Again, we hop back on top of the 200. We kind of F around for a little bit here, but then confidently get on top and stay on top. And once we're there, pretty much over with until we go back under, right? And so this continues to be a solid moving average to put on your chart, at least for the macro view, to know what's going on generally speaking. Because as long as we're on top, we're pretty good for the most part, with some exceptions. Okay, we'll have a few days where we'll have fake outs and some scares. Nothing's perfect. Technical analysis is not 100%. If there was 100% strategy on anything, we'd all be rich. So there's some variance in everything. So that's the 200. Let's do one more, and this is probably the most damning evidence that we are nowhere close to the bottom of the cycle. To show you this piece of evidence, I'm only gonna go back as far as 2017 because there's not enough back data for the prior cycle. So on this one though, I'm gonna show you that just count days, and that is probably the most basic way to see that this is cyclical, that this has happened before. So in 2017, if you count from the bottom, which is Wednesday the 14th, January 2015, to the top, which is Sunday the 17th, December 2017, you will see that there are 1,068 days from the bottom to the top of the 2017 cycle. And then if you measure from Sunday the 17th, December 2017 to Saturday the 15th, December 2018, which was the bottom, there are about 363 days, almost an exact full calendar year. So note those numbers that I just gave you, because I'm going to show you how they repeat themselves. Because if you look at the next cycle, which is the 2020 cycle, you're going to see that from Saturday the 15th, December 2018 to Wednesday the 10th, November 2021, there was 1,061 days, literally 7 days less than the prior cycle. So 1 week off. That's about as exact as you're gonna get. Is that just an accident, or is this actually cyclical? This is something that's predictable. Well, if you go back 2 cycles, again, from the top to the bottom, we have almost a full calendar year, just over by a few days. Okay, these numbers are off by a few days, guys. That is pretty damn accurate, right? And if I come to this current cycle in 2023, from the bottom, you can even check me, go fact check me, find something lower than Monday the 21st, November 2022 to Monday the 6th of October 2025, you will see that there was 1,050 days. Pretty damn close. 11 days off of the last cycle from the bottom to the top. And the same thing, we haven't gone to the bottom yet, but it's been about 200 and some odd days since then, which means we have about 87 days left, which means if you're following the back data and the fact that these cycles are repeating themselves, then somewhere around October, okay, you're gonna see a bottom. I could be wrong, this is not financial advice, but if you look at the evidence and if you believe that these cycles are cyclical, then we should have something that is repeatable, identifiable, and predictable. So I hope this video helped you guys alleviate some anxiety or stress as to when things are gonna bottom out. Use these tools to your advantage. I hope you guys got something out of this video. If you did, smash that likes button. Check out my links. I got free courses. I got free education. I hope to see you guys on the next one. Take care.